Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's June 13th. This will be our chart lesson for today. And today was an FOMC announcement day, so a lot of times you'll see a real tight range like this or before an announcement. A lot of times you see how tight it is right here before we go into the announcement. A lot of times you'll see that for an hour or two. Here it really started about 11:30 and it didn't end till 1 o'clock, so it's hour and a half as it is. So, but generally I mark that area out. You don't want to trade an hour going into an FOMC day, especially when it's real tight like this, because just as here, this looks like a possible entry right here, and you just would have got stuck in that or maybe even stopped out of that before it took off. And so generally you're better off to be out an hour ahead of time. Also, I wanted to address, seemed like we had some video issues yesterday. Um, Not sure why it was zooming in like that. It's happened a few times in the past. It's something to do with the software. It wasn't me zooming in like that, and I could not see it on my end. So I apologize. I know it probably made it difficult to, keep up with what was going on, but I didn't see it. I don't have time to watch the whole video again. So if there's some little, if you notice something, point it out to me. But I generally don't have time to do the video and then go back and watch it again. And I mean, this thing takes me an hour and a half to a couple hours every day already. And, I don't want to spend another 20 to 30 minutes, however long the video is, watching it again just to make sure every little detail is perfect. Unfortunately, I just don't have time. So hopefully it won't happen often, but if you do notice something, please let me know and I'll try to address it. But yeah, I'm not sure what happened. So um, normally it will leave if I well, it's hard to describe, but I can actually check it before I finish the video. There's a way to check it. It leaves some little software actually shows you where there's some zoom ins at, and so I will watch it for the next few days to make sure I clear those out of there if they're there. So we can, there's a little step I can take to make sure we avoid it. But what happened before was I just didn't notice them yesterday, and that hadn't happened in a while. But I think it had something to do while I was gone for a week. There was a big update or something that my computer did, and so I think that update might have caused some kind of interference. So I'm gonna just see how the video does today when I get done with it, and we'll see if it's there again. And if it is, there may be some update I need to do to my software that I use to record this. If it's not there, it just might have needed a restart. So I did restart my computer, and it could have just needed another restart. Sometimes you get these little bugs. Don't ask me why, but everybody knows computers and just things happen. So, but anyway, bottom line is I apologize. I didn't realize it was there. It wasn't me zooming in. It just happened. So it was something the software did without me being aware of it. But I'll watch for it for the next few days and make sure it clears up. And if not, we'll see what we need to do to get it cleared up. So, but trying to think if there was any more housekeeping things. Oh, I did want to share. I had a gentleman send me an email today. Basically, he says, "Hello, Mac. Great that you're back from your holiday. As I promised, I'm done. I'm going to do a donation on your behalf in your name, 10% of my first profitable month," and he donated. Uh, Looks like this is pounds, 100 pounds, uh, plus another 25-pound gift aid. So 125 pounds. So congratulations to that trader. Um, I haven't read anything positive lately, so when I saw this, I thought I've saved a few emails that I wanted to read, and they just kind of get set to the wayside, and I don't get a chance to read them. So always send me your success stories. People like to hear those. It encourages them, gives them, faith that if they hang in there, maybe they'll get there. And so we haven't had enough of that lately, so I'll try to do more of those. And this can be done. just, some people can't, some people never get it. They really don't. I can't explain why some people can do it and some people can't, but there's a large mental portion of this, and all these trades. Just I wanted to say this too because I've seen some comments here and there about, why did you make that trade? Why would you even make that green right there? Well, there's a couple of reasons. One, if I don't talk about it and people see it, they're probably going to send me 20, I'm going to get 25 emails that I have to answer about it. So I like to point out I call these aggressive. These are trades that you probably only want to take if you're really good at this, if you're profitable and making money. Otherwise, you want to stick to the red and the blue. So just to clarify that for some of you that maybe don't quite get that yet. So just because I mark one in green doesn't mean you should have taken it. It helps to, if you didn't see it, then, that's one you can study and look for it, and maybe next time you'll see it. So just keep that in mind. And even the red and blue trades, sometimes I may not consider them aggressive, but you might, and that's okay. None of this is written in stone. That's the beauty of price action. We're not following a script that says if you see this, this, and this, you got to trade, or if you see this, you have to trade. We filter our trades, and we're able to use a lot of different things to filter our trade. How close to the EMA, how far away from the EMA. Is it a second entry? Is it a first entry? Is it a key entry point? Is it the middle of the range? Is it the far, is it the support or resistance of the range? There's so many filters that we use to help us, but that's why we're able to have more success, because with time, getting a really good feel for price action and understanding the filters really changes everything. And so don't overanalyze and over speculate and second guess and worry. If you didn't see the trade and it doesn't make sense, don't worry about it. Just skip it and move on. That's the key to this. You won't see every trade I see, and I may not see every trade you see. Generally, coming along after the fact, I can see most of them. But you may see something and it may look a little different on your chart, and you may take it and I may not. Doesn't mean you were 100% wrong. It doesn't mean I was 100% right or I was 100% wrong. So there's you have a lot of freedom in this type of trading to go with what you want. The real key is making sure it's at a key entry point and you got a good signal bar and that it's a good setup. Here's your key entry point all the way down through here. And so when you get this big bearish bar right here, it was hard to deny entering right there, even though it's a first entry and there is a short-term trend line working up through there. I still marked it because there's enough other reasons to want to take that trade. And so here's one that's very aggressive, but it broke higher. It actually opened, it actually skipped up a tick and had a little gap there and immediately sold off and went right out the other side. I mean, you're going short at the low of the day, but if you can see the whole big picture, we just came off a key entry point. That we're probably going to the other side, most likely. And then you also got a short-term trend line working down through there. So there's enough. That's a key entry point. It's a shorter term one, but it's still a key entry point. So that's still, I mean, you could, if you wanted, you could even argue for that to be almost red. So don't get so hung up that on setups that you don't see that I mark. Just don't worry about it. If you don't see it and you want to try to see it, or if you can't and you want to send me an email to ask me about it, that's great. But don't get yourself so hung up in the weeds that you overanalyze and you talk yourself. The next thing you know, that's one of the keys to being able to trade successfully, is being relaxed and trusting your read on it. If you're uptight, if you don't trust your read, you're going to make all kind of mistakes and you're not going to have any success. So learn to trust your ability to read it. Learn to trust the setups. That's why we sim trade for a long time, and that's why it takes a long time. You can't do this in a few weeks. You can't do it in a few months. Most can only do it after a few years, and that's common. This is it's not hard, but it's not easy either. So I know that's a double statement and probably a confusing statement, but when you get there one day, if you make it, you will understand exactly what I was saying. I've said that many a times, and you'd be surprised how many people come back a year later and says, Mac, I used to think you were crazy when you said that, but now I know exactly what you meant, and you were exactly right. It all makes sense now, and I understand why you were telling me that it wouldn't make sense, and you'll think you've got this several times before you really do. And that's pretty common for most every trader. So, but anyway, that's enough of my soapbox today. I'm going to talk about the trades. There's not a lot of them today. A good bit of the trading day was marked out because of the FOMC announcement. So, and there weren't a lot of trades anyway. So I'm going to work through these and we'll wrap it up, and we'll be back again to do it tomorrow and wrap up our week. Hard to believe I've already been back a week, but man, the time's just flying by. But anyway, first trade I saw was right at the 7 o'clock hour. We had a trend line up, a trend line down. We got a break right here, and notice there's two moves up, and there's a second entry short with a big bearish bar right there, a little bit away from the EMA. I like going short right there. I really thought we'd try to push for a new low. Didn't happen, but it was an easy scalp. And then we just started going sideways, and it got really tight here. And I don't see anything in there you want to enter until finally we get a break, a little failed break out of this tight range, and you get a big bearish bar right at the top. You got room to get out. That's a good place to go short. It actually pushes down, pulls back, gives you a lower high. This is really your signal bar, but this was a nice bearish bar right there where what looks to be at that time the midline. It does turn out to be the midline at the end of the day, but you can see it right there already. It's very clear. Actually, this looks to be the high of the range. So you got a big bearish bar right at the high of the range, but your stop would have had to go above this bar. It didn't matter. You put your sell stop right there, you would have been out, and it wouldn't have even, I mean, there would have been never any heat on your trade at all. But still, your safety stop has to go above that bar right there, because that's the high of the swing. So hopefully that makes sense. And then we run down and we bounce right off the lows, and we get a double test. Notice that low, we tested it once, we test it twice, we get a nice bullish bar. You got room to get out. There's your next trade. And then of course you do get a bearish bar right here as well. And if you'd have taken that one, you'd have been in a little bit of trouble. You finally do have somewhat of a couple of swings there and a trend line, so you could, that hopefully would keep you out. But if you did go short there, you probably got burned on that one, and just nothing you can do about it. But notice how it stacked up sideways right there. That should have been enough reason to probably stay out. You do get a little failed break up right there, and really at that point you might have moved this. Oops. Didn't mean to do that. Now I'll probably never get it back where it was. You might have moved that up a tick. In the end, I still think this is where the midline was, but at that point, you might have moved it up a tick because that's where the next closes were. The idea that I like to use for my support and resistance and midlines is where you get the most closes, the most touches using closes. Now notice we get all the touches there, right there, and that's where the closes are, and then suddenly the close moves up a little bit. So that's why I say that. But you can tell this midline is in the right place where I have it here. And so if you did go short there, you got burned. The good thing about this one is it was a second entry. That was the reason I like that one versus why I don't like this one. It's just a first entry. And when you got a second entry, you got another confirmation. Plus you get this big stem. That's a big reversal bar. This one didn't quite close on its low. So hopefully you didn't get fooled on that one. Wait on the lower high like you would have here. And you don't get it. It just keeps going higher. And then of course now you've got to close outside and a couple of legs up, and you turn down right off the high, and you get a fairly bearish bar. So you might take that one. But again, you're almost always better off to wait on a lower high, which doesn't come this time. You run down, you get a close outside, a couple of low moves to a new low, and then it bounces. And you may ask, why didn't you like going long right there? Well, by that time you've got 1, 2, 3, 4, 5 bars stacked up side by side with stems on both sides. A couple of them look very close to being a doji. that's a dangerous place to enter right into the EMA as well. Of course, when you're, on range days, you don't worry about entering into the EMA as much, although you would like to have more room. It's not as important. But being on this side of the midline, you really would expect prices to come down here, and you can't go, so you just really don't want to go short or long there. And then it runs back up, and now you got two legs up, and guess what? On a bigger picture, this would be a second entry, but notice how you're going sideways again, and so you really got to wait on a lower high, and you finally get that right here. And that's a fairly bearish bar. Most of the stem is on the upper side. There's like one tick. So I like that one. Plus it's a double test. It's a lower high. It's a double top. You can count that as a double test of this level here. It's at the top of the range. You got plenty of room, and you may, a lot of times when you catch that high of the day, you may be able to ride that all the way down. And here it is again. I showed you one yesterday where it went all the way up. And here's that ride coming down. And you got a short-term trend line. We'll just kind of we'll make it a dot just so it looks a little different. But you can see it coming down through there. And that's all you had to work with at the moment. And notice there's a pullback here that comes off that key entry point as well, but it's right into those lows, and you don't want to enter that. It would have worked, but you don't know that, and you can't risk it. So then we go into the 12 o'clock hour, plus that is right into the 12. Of course, you still got plenty of time right there. So you didn't really have to be worried about going into the 12 o'clock hour just yet, but going into that support right there, that's what you had to be worried about. And you can see that it bounced a couple of times. It ended up would have pushed down and worked, but you just don't know that. And you can see here, even though it's in the, right into the news hour, the price action still works. Look how the upper trend line holds, the lower trend line's holding. And that's where I ended up getting this upper trend line. Somebody will ask me, why'd you start off this high instead of this high? Well, originally I started off that high, and it was much steeper. But when it didn't fit on this side, I adjusted it and used the new adjustment up here, and look how perfectly it fits. That's the right fit, because it fits on this side, and when you copy it and bring it up and use this high, it fits on this side. Most of the time you'll start off that high right there, but occasionally it'll start off the closes, or it might start off the high next to it. This really was the high point. We just matched it again here, and that's probably why it worked off that high point. So hopefully that'll answer a few questions, because I know I'm bound to get that question. And then we're working down, and you turn down off of it again. Of course, this is all during the 1 o'clock hour, so just wait till it kind of settles down. And you can tell down here we kind of settle down, and we come back and we turn down right off that trend line again. Key entry point, it's been holding prices all the way down, big bearish bar. It's a first entry, but I'm going to take it probably anyway. I would even be tempted to take this one, but that's just too bullish. With the news having come out, there's too big a chance that it might push on up here and test this breakout area, or generally after the news it resets pretty quickly. It did end up resetting. It came back right here and reset before it sold off again. So that's pretty typical. Generally after a news item and it goes crazy, a few minutes later the market, sometime before the day ends, the market comes back to its senses and it says, hey, let's go back and start over and make sure prices really wanted to go here. And that's exactly what happens. I see that over and over and over. But anyway, I didn't like entering here. We moved on down, and we already talked about this one. There's a midline here, and it probably will be right off the midline. You can see that right there. And you know that you're not back down to the lows yet. So you've got some more room there. There's the short-term trend line. It's key entry point. This is still a key entry point. So going short below that. Actually, you would probably wait and go short below that bar, although this is where your signal bar is right here. And so your safety stop has to go above that bar. And then it goes on down, and where does it bounce? Right off to the tick off that bar, and off it goes. And this bar was so big, or else you might have got a setup down here to ride it back, but you just didn't get it. You get another one that looks like it's going to give you a high or low here, but then you get a matching high and a more bearish bar, and so you just don't really get a chance. You might, if this one would have broke lower and turned and went up, I might have said, hey, but this late in the day, this is the first break of this, and you don't really have an overshoot, so you could get trapped right here with those 3 up down. I mean, there's 3 up downs. That's just a little trading range, and so it is a bounce off the key entry area. So if anything, you might go long right there, not short. But I don't think it's worth risking. And then of course you got your 2 legs up after your break, and then you get a sell off down to a new low, and now we're into the next day. This is all after 2 o'clock, but that's a nice trend working down right there. And you could have drawn your trend line. And notice what happens. Here's your reversal pattern right here. So you could have gone short right there, but I wouldn't have. Then it turns up again, so you get another chance in a big bearish bar. I wouldn't have any problem entering under either one of those. That's a reversal pattern, and look what happens. Boom, off it goes. So yeah, not a great day, but there's some trades in there. You just have to be careful, and you really want to make sure you try to get in as close to this resistance and this support as you can. And where you really got to be careful is when you're in the middle. At this point, this wasn't in the middle. You can see that there's your range at that point. Later on in the day, it's the middle, and that's why you got to be careful entering there, because it looks like you could go long, then it looks like you could go short, and you just get whipsawed both ways, and it turns up when you would expect it to go down because we just came off the high. So it gets a little questionable, and so you're better off just to ignore it and stay out of it. So anytime you're unsure and you enter, you're just gambling. We're not gamblers. Wait till you get a sure thing, or one that you feel really good about. And you may feel really good about one trade, and I may say I wouldn't take that trade, but it works and you felt good about it, so you did the right thing. If it fits our criteria and you felt good about it and you took it, even though I didn't like it, doesn't mean it wasn't a good trade. So I mean, if it's an obvious mistake, I'm gonna tell you, you just got lucky. But sometimes there's trades that don't look as good on my chart that might look a little better on yours, because tick charts are not identical. And some people will tell you, well, that's because they're not identical, that means that signal bars don't matter. But I've shown over and over and over where the signal bar is a worthy filter. No, it's not 100%, just like anything else, but it's a filter that will keep you out of bad trades, and that's what we want to do. We don't want to be taking bad trades. And will you occasionally miss a good trade? Yeah. But I promise you, in the long run, I've been doing this long enough to know, my experience tells me that it will save me more times than it'll hurt me. So, you can't, there'll be a lot of times that trades will take off and make a good move without you, and you weren't in. And while you hate to see that trade take off without you, you still did the right thing by not taking it. So that's the key. If you did the right thing and it went off without you, forget it and move on and look for the next trade. If you sit there and you let that fester and worry you, then the next thing you know, you'll make a mistake, because you'll see it again and you'll say, well, I missed this one last time, and you'll take it this time, and guess what? This is the last time was the one time it works out of 5 or 6 or 7 or 10 tries, and every other try you try after that, it's going to fail on you. So that's the reason for those rules, and that's the reason we try to follow them. So keep that in mind. But anyway, this is almost 30 minutes. I'm going to wrap it up. Again, I will check to make sure there's no zooms on this video, and anytime you notice something, please let me know. Appreciate you pointing it out, because I had no idea until somebody pointed it out. But again, it wasn't me zooming in. It was just something to do with the software that did it automatically. I don't understand it. There's some kind of bug in it that it does that occasionally. But I'll keep an eye on it for a few days and make sure that we don't have an issue with my software. So anyway, I'm going to wrap it up. We'll be back again tomorrow and wrap up our week. But I'm done for today. This is Mac with priceactiontrading system.com, and we'll see you next time.